Good morning, everyone, and welcome to the European crossover webinar. And it's post FOMC and a little bit worn out. Several of us were up in Asia. Some of us out of the chat room, including Blake, were up in Asia trading. So we're all a little bit pooped. Hope everybody did okay in the FOMC. Looking into today's data, Amanda mentioned, she goes, it's probably going to be a little bit slow being a pre-NFP, which is, she may be right. So we shall see. Dollar's really holding up really well. Wow, look at this euro, still on lows. In Asia, we were coming into that 1052, and I mentioned to Blake, he was looking for lower, but I said, well, 1052 was also, we were looking at 1079, which temporarily held during the FOMC, and we saw a bounce, and then now this 1052. But we even went beyond that. Was going a little, even in Asia, we're going below that. Looking into data, we have final PMI here for Eurozone, came in at 46.5, just a hair above the prior 46.4. Manufacturing PMI for UK is due out. They're looking for 47.7. And we do have Bank of England at 7 a.m. Eastern. And Challenger layoffs and initial jobless claims. Obviously, tomorrow's NFP. We do have at 8:30, or actually 9:30 Eastern time. I'm in Texas, so I have mine set for Central. 9:30 Eastern, we'll have a Canadian PMI. And at 10 a.m. Eastern, we have final manufacturing PMI here in the States, 9:45 Eastern. And 10 a.m. Eastern, we have construction spending, ISM manufacturing, PMI. Well, we did see the dollar really move on, and it moved on. It did, and like I said, we got up. We came up to this 98.71, and remember that was our bias chart resistance, 98.71. We paused before we got there. Let's see, the high was 98.68, not bad, and then paused back to about 98.39. Then we kept on working a little bit higher. Obviously, like I said, the euro, man, really took a pretty good hit. And we've seen the dollar CAD continue to push up higher here after it took a pretty good dip pre-FOMC and came back with a nice hammer on the 2-hour and then really started mounting higher. Cable's still on the weak side. Remember, we still have that 2106. I don't know if we lowered it down. Yeah, we had 2106. We kept it, but we just added 2065. They took it out, and it's held okay above that 2106. Dollar yen, we made it to the pivot I was looking at. I'll point that out. I had that discussion with Dale, and Dale referenced it again yesterday. And you can see here, it's still returned to the scene of the crime. Yeah, I talked about, how when the market was up in here and I was so bearish, I ended up getting stopped out. Really ticked me off. I remember the time. I put on a pretty good short too. I think it was like at 1184. I mean, some things you could just remember so clearly. I think I remember putting this on like 1184, maybe 1182. But it was way up there. I'm like, I'm telling you, it's going down. It's going down. And some people were looking for 114, 115, and And then they ended up getting stopped out. I think it was like 1222 or 1224 because then it wasn't at the high because I think we made it up to like 1240 something. And then we came back down. We kind of languished. You can see here for a couple of days. And then finally we started heading down. But I always kept thinking that we were going to get to the pivot, and which was 927. And we eventually did. Then we saw a bounce off of that pivot, strengthened that resolve as a pivot. And then we came back down and retested the pivot. And eventually we broke lower, and the rest is history. So when we fiddled around down in here, I thought that, especially the way the dollar been holding up and going into FOMC, that we could make it up to the pivot. And certainly that's what we did. We made it up to the pivot. I did go in and get short up there. Got up as high as 19, was it 31? It was pretty quick when it just popped up above it and then quickly gave in. Of course, obviously the euro got whacked pretty good. Aussie dollar is still holding up okay, but certainly is still on the weak side. And then and of course pesos come back. Blake was long. I think he took a little bit off, but I think he's still long. But the real key driver here on the peso, remember, is 1923.6. Even with the whole thing with the Mexican finance minister, remember he resigned on Twitter, and that was this whole brief run up here. We never could seal the deal with the close above 1923.6. So that's you can actually call this basically the pivot, really, right here. Could actually, we're going. So that's the pivot there. And you can see how many times we bounced around. It can't cover the same resolve as the dollar yen, but we have to get a daily close above 1923.6 to open the door. And then we can make a quick run up here to 43, 20 pips higher. Let's go in and take a look at the news. The morning bid, the BOE caught in a deal versus no deal quandary. Economists polled by Reuters are almost certain that the Bank of England's Monetary Policy Committee will vote 9-0 today to keep rates on hold at 0.75%. What is less clear is what happens after that. The standard way to assess a bank's next move would be to look at its forecast, which currently have the economy clicking along at a decent rate and inflation pushing over its target, both of which imply a rate rise further down the line. Yet that is based in the face value of government policy of securing a Brexit deal, and so does not take into account a growing concern that ultimately Boris Johnson will go for a no-deal exit that would plunge the economy into recession. One solution would publish a set of gloomier forecasts on the basis of a no deal, but the bank is reluctant to do that, as to leave the door open to the charge of an anti-Brexit bias. More likely is a modest tweaking of some of the assumptions which its forecasts are based, essentially still leaving investors to make their own guesses about the future path of rates. Final PMI numbers for manufacturing in the Eurozone are likely confirming the preliminary figure that came out last week, which showed activity at its weakest since December 12, 2012. Assuming this is the case, it will only underline the diminishing chances of any rebound in the second half of the year and once again set the stage for a European central bank action next month. UK's Johnson faces his first electoral test today in a by-election in when the Welsh sheep farming town of Brecon, a loss by the ruling Conservative Party, would reduce its working majority in Parliament to just one seat. The prospect of a steep European Union tariffs being imposed on its U.S. Welsh lamb exports in a no-deal Brexit has prompted widespread concern among farmers. It's also a test for collaboration between anti-Brexit parties to thwart Johnson in a bid to boost the Liberal Democrats' chances of winning by concentrating on the support of Remain voters. Other pro-EU parties, including the Greens and the Plaid Cymru, are not standing. The dollar's booming reaction to the Federal Reserve expected quarter-point interest rate cut is it all. The dollar index surged to its highest in more than 2 years, with euro-dollar dropping below 111 for the first time since May of 2017. Brexit hobbled sterling, resuming its steep decline to hit 30-month lows just above 121. Dollar yen topped 109 for the first time since May this year, with Chinese yuan and the overall emerging markets currency index retreating to the worst level since mid-June. In some respects, the Fed was also likely to disappoint given how aggressive rate cut pricing had become, despite a still relatively buoyant U.S. economy. But Fed Chair Jerome Powell perhaps threw more cold water on futures markets than many had assumed by stressing the cut was insurance against any downturn and describing it as mid-cycle adjustment to policy and not the beginning of a long series of rate cuts. While strategists think one more cut this year is possible, Powell tamped down expectations for cuts of 100 basis points or more over the next year, and the futures market now sees only one chance in three the Fed will cut at its next meeting. On September 18th, with the European Central Bank locked and loaded for a rate cut and possible resumption of bond buying stimulus next month, euro-dollar has taken the heat. Sterling's relapse comes as the new cabinet of UK Johnson continues to beat the drum of a no-deal Brexit on October 31st, giving Bank of England policymakers a real headache at their meeting today. Governor Mark Carney will have to address the likelihood of further easing in the event of no deal, but he will have to be careful not to undermine the pound further. Given the inflation effects of weak sterling, the pound is nearly 8% on a trade-weighted basis in just 3 months. The cautious Fed left stock markets a big glum, too, with the S&P 500 closing down last night by more than 1% for the first time since May. And we'll move into FX. Dollar climbs as lengthy Fed easing rolled out. Sterling's Brexit pain worsens. The dollar rose to a 2-year peak against the euro and jumped to a 2-month high versus the yen on Thursday as Fed Chair Jerome Powell ruled out a lengthy easing cycle after delivering the first rate cut since the financial crisis. At a press conference after the Fed's decision, Powell says it's not the beginning of a long series of rate cuts. I don't say it's just one rate cut. The traders will see one more rate cut this year. Powell's remarks, however, slashed expectations the Fed is prepared to lower rates well into next year. The comments about Powell were not particularly dovish, so this is confirmation that this is a small insurance kit, said Masafumi Yamamoto. And one moment. This outcome limits the dollar's downside from here, and rate cuts will be on the small side, but this still strengthens the case for a prolonged U.S. economic expansion. The euro fell to 10.34, the lowest since May 16th, and the dollar's gains quickly accelerated versus the yen in early Asian trading in response to a flattening of the U.S. yield curve. While financial markets had widely expected the Fed to reduce its overnight lending rate by a quarter basis point to a target of 2 to 2.25, many traders had looked for a clear confirmation of more rate cuts from Powell. A day prior to Fed's meeting, traders had forecast a 35% chance of comments rippled through the Asian central bank to keep its Chinese central bank to keep its main policy rates on hold on Thursday, opting not to follow its U.S. counterpart. We talked about that because they had made that very clear. Sterling skidded against the dollar to its lowest in more than 2 years on growing risk of a no deal. And economists polled by Reuters are almost certain that the BOE's policy meeting will vote 9-0 to keep rates on hold at 0.75%. By no means do we think the weakness for sterling is over, in the sense that the market needs to price in more risk of a no-deal Brexit, said Rhea Trill, head of FX strategy at National Australia Bank in Sydney. If the dollar remains supreme in G10 currencies, then this is trouble for sterling. And we're going to move on. Well, there's that level that we had 1079, and this active level actually temporarily held the market yesterday. Um, then when we came down here, we actually saw the market bounce back up. It actually overshot a little bit, then bounced back up. You can see that here on the 2 hour chart. But we've even gone past the 1052, and we talked about that. Eventually we'd end up going to 110, and it certainly looks like 110 is what this market wants to do. There's some right there, 1025. Do you see that right there? This little notch. Right there. $10.20. Let's go with 10.20. On the upside, well, if it could get up to an upside and we saw a good bounce, I don't think we'd see that today, but it'd be right here, 1080 on the short side. It's 1079, which was really what we had, but there's a nudge right there just above that makes it 80. So there you go, 1080. We may not see that till tomorrow if, come a little bit weaker. That's what they go for. It's basically the flip of what was support. Remember 1079/52. So there you go. Let's go and move into cable. Well, no change in cable. We do have BOE today. So we're going to stick with what we had already, which is 2106, 2065. And on the upside, I don't think we'll see it, but 2197, we'll take a look on the 2 hour chart. $22.06 be a stretch, but it's going to have a tough time, right? Let's go right there. 2191. We'll call it 2192, 2192. Obviously, there's resistance right in here, 2163. This whole area right here. So you initially say, let's go with that 2173, and I'll show you. $21.72. Next up is going to be the Australian dollar. I don't have too much pep today because I tell you what, I'm running on fumes here. Up late in Asia trading, so that's why I don't have too much juice. Hang on. Well, we did see this market hold here. It's actually holding up okay considering what the dollar's done. So we'll go to 68.31. There, it did make it to that level. Hmm. 68.76. Boy, this thing is really taking a beating. Goodness gracious. I am pooped. I was going to say hi to one of the guys in the chat room. He just came in and said good morning. Wrong keyboard. Good morning to Taha. Okay, let's go into the Kiwi. Man, the Aussie and the Kiwi, boy, look at this bludgeoning. Unbelievable. Look at that. 1, 2, 3. Well, held there. Then then down, then we kind of held there again. You look at this is just mildly, barely hanging on by its fingertips and then whacked again. Here's our support level right here. And it's above from where we got. We actually got as low as what? 65.34. Let's take a look at the 2 hour. My goodness. Let's go right there, 65.43. Call it 65.42. This poor Kiwi has just been beaten up like nobody's business. It's going to be 65.90. It's a ways away, but well, not that far away, but it's 65.90. Well, that's not bullish anymore. We know that now. And let's go move into dollar CAD. Keep hitting the wrong keyboard. Well, this thing really turned around. Let's take a look at this 2 hour chart. I'm surprised that we were able to continue to advance. Of course, the dollar's still pushing up higher. When the dollar started to ease back, even the dollar, it got up here, but it wouldn't go beyond this 15 area, and then we started to slide back. And but this is here in Asia, but I mean, it's still pushing up a little bit harder because of the strength of the dollar. But look at this, we dropped all the way to the single digits, and look at this rebound. Well, resistance is going to be this level here that was key before. So it's going to be 32.36. Let me see here, we're down here. So it actually, right there, called 32.38. And now we can say it's bullish, especially after that recovery. Support. $31.87 for now. Keeping it pretty tight. I mean, technically, I mean, I would think we could come down right to here. Right there would be a good level. 31.78. But I don't think it would give you that chance. So we're going 31.87. Next up, the dollar peso. Well, we know what it is. We can have this, and I don't know why they had to change these colors around. What's this update? Doggone it. Because you can see with the dollar yen, it's a very bright red. This is kind of like a drabby looking red. And I'd have to fiddle around with it. Don't have time for that. But it's 1923.6. All about 1923.6. We can close it with that. Obviously, we're pushing right now, but 1923.6. And intraday, there's no 23.6 there. Intraday, right there at 14.25. Call it 19.14.1. Let's go to the dollar yen. Well, we got to the pivot. We exceeded the pivot. I was looking for that move to the pivot. Um, So I closed out a third, 17. I'm not hanging on for long. I mean, I think we're going to eventually move lower, but my trading is so short term, so I'm getting ready to close out a second, third here. Let's go with 1925 for the resistance. Somebody will make that. Let's go 1922 because I was watching Asia, so let's go with 1922. Well, you know what? We'll stick with the 25 because that will lead us a little bit into MFP, and that's what I'm thinking. They may get a little bit of strength there. Close on that. Support. We have this right here coming to this level. Let's go with 889. Let's drop a little bit lower right there. 885. Okay, into the cash dollar index. Well, we had 971, and that held the market. But the high was 98.68, so we had 98.71. We're pushing higher. I said if we got beyond that, we could go for 99.18. I mean, this is a marker, so I don't want to put 99.18 all the way. I mean, that's be a pretty good little jump. I'll just keep it simple, just go with 99, because really above 98.71, my next level really is until 99.18. So I'm just going to call it even Steven here at 99 as a fig level. And for support, $98.56. So it doesn't look like he's going to head there, but that would be the support. Let's go into the cross rates. Oh, hang on. Pull that page up. I'm getting a new computer system built, and I had to I set up these screens, and now they're all discombobulated. So hold on a moment. Let me hang on. My goodness, what a long day yesterday was. Holy smokes. Okay, let's go with this here. There we go. Man, I'm so pooped. I'm not sleepy, but I'm pooped. I'm typing in the wrong keyboard. Typing the keyboard for the chat room. Holy smokes. My goodness gracious, golly. Finally. We did finally move up, but we're just above this level, the 71.45. It's trading so tight. We'll go with 71.38. We'll call it 71.35. Don't want to be that tight. That's still pretty tight. 71.35. Let me. Outside is 71.72. 71.72. Mm-hmm. This is actually a little bit of support right there. Let's go and move into the intraday. $20.40. Mm, 2071. Let's go with the euro long. Made it to that 61%. Boy, have we come on from that area. This thing was like launching like a doggone rocket. 40, 60, 95, and it can make that run. We'll look at the 2-hour charts. What a screaming run that made. Look at that. 62, I mean, we actually may have made it up to 62.46, but look at that. Over 100 pips lower. And boy, tell you what, it hasn't been quiet either. Boy, look at that. Nice rally back up only to fade. Resistance is right there. Well, let's see, it was stretch 61.78. Let's go right there. You see there? 61.64. I'll show you. Close 61.65. On the downside, we know that 60.95 is pretty keen. It's already had a pretty good little fall. And I think that we will see some buying come in. So let's go with 60.96. Let's go move into the Euro Kiwi. This one had a pretty good run too. This is, remember, we were covering this. 68.25 was a 38%. I came so close to putting that trade on. I'm glad I didn't, because look at that rally we saw. Now it come back down. We still haven't made it to the 68.25, but holy smokes, what a run. Let's look on the 2-hour chart. Resistance will be right there, 69 even. Do have a little bit more right here, and it might have some trouble there, so let's keep it relatively tight, especially yeah, we'll mark it there, 68.86. For today, 68.16, 68.16. There you go. The reason I put these pink lines here because they stand out, and I usually mark them. You know, I'm not trading the euro kiwi, but lots of times when I'm looking, you know, if you're following several different markets, it's easy for me to see, whoa, it's coming into a key level because I see it already here. You see, I mean, I put my main stuff on with a thicker level here, a main level, and then obviously I don't call them incidental levels, but here the thinner one. That pink one is just generally I have it for the days high and low. Doesn't mean that's going to be the outright high, the outright low, but I'm able to look and say, whoa, it's coming right into key support. You know, I could click on the screen and look a little bit more closely at it. I have a couple of doubles up in here that I hung around, but I'm just stating that's the way I would look at it. Okay, let's move into the OCN. You can see where it respects the touches. You see that's coming across. I've reiterated that a couple times. Was on Facebook Dale, and what I do is I put my levels across the bodies, or I see the most touches of bodies. It could include the wicks if it happens to be, but to me that's where the volume is. Now, if you're looking on a 5-minute chart, it may not do as much, but you can see here's on a 30-minute. I put it here for a lot shorter. Usually I look on here unless I'm trying to get close with the 2-hour chart. But you see all these touches, how important that is, and see, look where the market runs out of gas. It rallies up almost right to the pip. So that's going to be 74.86. And on the support side, see that coming across there? Got 74.61. And just like that might be a little bit too close, especially with the weakness we're seeing. We'll push it down here, get a little more touch, right? 70, which isn't still much, 74.58. Let's. I haven't traded this pair in a long time. It's going to be 74.58. It's traded relatively quiet. I'll keep the 57. Let's go into the guppy. Obviously, with the BOE, who knows with this pair? They have, oh my goodness, this has been just obliterated. Nothing short of obliterated. Look at that. 1 foot, that's 15 figs. I mean, holy smokes. On the short-term basis, 31, well, we'll look at 31.92. We can look at it here. 31.90. $31.90. $31.90. $32.49. This could be easily taken out with BOE, but right now, things being equal, all things being equal at this point. 31.90. Lastly, starting on 'em. I think there's good volume here, but I think they'd be able to take it out just a little bit further. Let's go with 76.70. 76.70. 77.14. And that's the buy chart for today. And thanks for joining us here on the European crossover webinar.